So the topic for today is revenge loser. I want you to raise your hand to explain what you understand by revenge trading. So revenge trading, it's an important topic. It is a topic that leads to a lot of people destroying their accounts. So I would love to hear your thoughts.
My answer would be when you lose a trade or a series of trades and then you're determined to make it back and you risk more than you should on the next trade, sometimes doubling down. It's when you lose a trade or a series of trades, then you're determined to win back what you've lost, and you take risks that you shouldn't, taking a trade when there's not really a good entry.
All right, excellent.
Maybe risking too much.
Okay. Have you fallen for the revenge trading trap before?
Oh yes.
Yeah, they're
Pay the price.
easy school fees to pay when you start out trading. Does anyone else want to add on what revenge trading is or what they believe revenge trading is?
No, I totally agree. I think, all of us have got into this trap, and certainly when I started trading many moons ago, I got into this trap where I started losing money on a particular stock. I thought it was going to rebound, so I kept buying, and eventually wiped out my portfolio. So it's something I think a novice trader can do, and one has to be cautious to avoid this situation.
Averaging down is probably the most dangerous tool that a trader can use without logic and rationale. And I think we should have an entire discussion on the averaging down, because that is a form of revenge trading without carefully thoughted process on how to go about that.
Yeah, I agree with Dr. Sam and Martin, where I suppose your emotions take over.
Yep, we've all fallen for it, and if we haven't, then someone's lying, because it's all part of the process. Revenge trading is basically an emotional form of trading where after a trader takes a loss, they decide to get right back into the market to try to recover from that loss. So for example, let's say you're down $200 a day in one day, and your ego has been completely shot down. And in 23 minutes, the stock market's going to close, which will leave you pissed off at the fact that you have taken a losing trade. And so you decide, before those 23 minutes are up, you decide to make up for that loss. And so you take another trade without a strategy, without rationale. And why is that? Because no one takes money from you. So then what happens is you lose again. And because you don't have a strategy, you lose a lot more money than before. It's not $200. It ends up to be a $450 knock. And if this happens, then you can consider yourself a revenge loser. And I'm strict on this because you have to consider the fact that you've been a revenge loser, or you are, and you need to get out of it immediately, because so many traders lose money from revenge trading. Because at the end of the day, the market doesn't care about your feelings. The market doesn't care about whether you lost or even won on that day. It doesn't care. The only thing that cares is that you should care about your strategy and how you're going to be profiting in the medium to long term, rather than being in the present oriented of revenge trading.
If you have a series of losing trades, you should bet smaller amount each time. But what you tend to do in revenge trading is bet the opposite. You bet a bigger amount to try and get back what you lost. So if you use a percentage of your account rather than a dollar amount,
exactly,
your losses get smaller as your trade gets smaller, but your wins get bigger as your trade gets bigger.
Exactly.
Smaller steps down, bigger steps up.
Trading is never about how much you make or lose. It is relative percentage to your portfolio of what you gain or lose per trade. If you're thinking in dollars or you're thinking in rands, you got to stop trading immediately, because it means that you're going to be emotionally trading, and you're going to start, how do I say this? You're going to start thinking about the amount of money you lost relative to what you could have done with that money. So if I'm down, say, $10,000 in a week, I can rationalize illogically and say, I could have bought a car with that money. But it doesn't work like that. Rather look at the percentage of your portfolio rather than the dollar amount. Can I get some emojis? I want to see if you agree, disagree. Let's get some interaction going. Okay, good. And then the other thing I wanted to mention is that there are two types of market environments when you're trading. There is favorable, where the price movements yield high probability trade setups. And then there's unfavorable, where the movements in the markets do not offer high probability trade setups. When the market is unfavorable, this is where there tends to be revenge trading. For example, with the multi-trader system, as most of you are owners of the program, you know exactly how it works. I need a market that is broken out of a pattern or a sideways range in order to ride and profit from it. If the market stays in that sideways range and I want to revenge trade, no matter whether I buy or I sell and short, I guarantee you I will lose most of the time. And then just by losing that time means that they will set a precedent for me to lose even more in the future. So you need to get that out completely and remove emotions and personal opinions completely from your analysis. Because like I said, the markets have no idea who we are. They don't care about whether we won or lost. So let's go into the first part of today, now that we've established what is revenge trading. And that is... let me just find it. So part one is we're going to talk about over trading, where you take more trades to make up for your losses. Who would like to explain a little bit about what over trading is?
Well, I trade at my best when I look at the charts and I say, oh, look at this. This is definitely going up. It's at a Fibonacci level, for example. There's a candlestick formation. It's at support. There's just been some fundamental news which tells me it's going up. The dollar maybe is stronger than the pound on currency strength, looking at all the currency pairs. If I'm trading Forex, that's the time when I trade well. But when I find myself saying, well, this looks like it might go up, or let's try this, when you're not sure and you're thinking, yeah, I'll just maybe this will work, that's when you lose. That's when you're over trading.
Yeah, I mean, another word for over trading you can imagine is like trying to play catch up. You're catching up to what happened in the past rather than what your system is saying or yielding. 100%. Let's say hello to someone that we haven't seen so far. Flapperchip, I don't know if you're with us, but we always like to hear your thoughts.
Yeah, sorry, I missed that last bit. My headset went funny. What were my thoughts on? Sorry.
Okay, so basically, what are your thoughts about revenge trading and over trading?
It's just chasing your losses, aren't you? You should just carry on with your plan. Doesn't matter about losing. You're not losing. You're just getting out the market. That's how I look at it.
100%.
You just carry on.
100%. I mean, I don't even have much to say after that. So when you're over trading, as I mentioned before, you're trying to play catch up. This is where you'll try to make up for your losses by just taking more trades. And like, you'll need to stop this revenge trading before it becomes a habit, which is why I've mentioned it today. Because if you look at how the markets have been moving, and I will say that it's been the same in the USA, and it's been in the UK, and it's been in South Africa, that we have entered into a sideways, volatile period where it is very difficult to make an income if you're a trend trader or if you're a breakout trader. So we have to stop the revenge trading before it becomes a habit. So let's move to the second part. And the second part is, with revenge trading, is that when you revenge trade, you trade against the system, and it becomes, and you develop some form of gambling mentality. Does anyone have anything to say about the gambling mentality and trading against the system and why it is bad?
So I guess when you analyze it as gambling, it's because you don't have a strategy. That's ideally what we're trying to do, no? To have a plan. So I guess that when we are out of that plan, it's sort of like yeah, speculating in a way that maybe can flow out of control.
Yeah.
Yeah, maybe.
I do like the idea that you said when you're gambling, you're going against the trading system. Because the thing is, you stop trading on rationale and you trade on impulse. And instead of thinking logically, you think irrationally and you forget about everything you've ever learned because you are now entering into the emotional side of trading without any logic. And like, when it comes to trading, when it comes to gambling, I am not against strategic gambling. I'm actually all for it with, for example, poker, roulette, and other forms that have a statistical probability like blackjack, where if you have a system and you can follow it, you can very well make an income in the medium to long term, 100%. But when I talk about gambling, I'm actually talking about the 50-50, flipping a coin, the slot machines. You don't get expert or professional slot machine players in this world. So when you are trading against the system, you're just doing exactly what most people do, and that is guessing and just trading on impulse rather than rationale.
Yes.
Yes.
Gambling is a game of chance that people do for entertainment. There's no skill or analysis, no trading plan.
Gambling is that, but
you're just guessing essentially.
But are we in agreement that strategic gambling is different?
Yes. As you said, slot machines is gambling.
Yes. And flipping a coin.
Yeah.
Part 3. When you revenge trade, you avoid risk management and you take bigger losses. So hands up to if you want to discuss that. With when you revenge trade, you go against your risk management rules and why it is a problem. And you're on.
Hi, Timon.
Hi.
Good. Can you hear me?
Hola kala,
I
brona
would say-
sueku. Pesmas.
Taking bigger losses is because you're taking bigger risks. You're doubling up. You don't want to take a 2% bet. You want to take a 4 or 5% bet to try and recover quicker your losses.
Okay.
That's what I would understand.
And the thing is, I actually wanted to do an event on drawdowns. We probably will have to go over the next 3 or 4 lessons on drawdowns. But basically, when you lose 20%, then you need 35% to get it back. If you lose 50%, then you need 50% of your portfolio to get it back. And if you lose 100%, then you need 200% to get it back. So I definitely want to consider that as another event. Raise your hand if you want to also talk about the risk management side of things. No one. Okay, so when you are avoiding risk management and you're taking bigger losses, the biggest problem is that what happens if you win that trade? What happens if you bank a profit? Won't you feel like the king? Won't you feel like you have overcome the market and you've made the market your bitch? Like, honestly, the thing is that then you're going to continue doing this. You are going to keep going against your strategy. You're going to keep avoiding the risk management rules until the market does destroy you. And that's why you need to stop it immediately, because you don't want to be present oriented within your trading. Hands up if anyone wants to say anything about that. Boy der Herzurum. I do not know how to pronounce that, but I'm going to put on the megaphone. You can introduce yourself. Hello there.
Hello, can you hear me?
Yes.
All right, fantastic. Well, just a brief comment about this risk management that you are mentioning there. And I believe you should not be trading if you don't have a clear risk management technique before you go into trading. That's like a must. And then following like a Bible. You cannot overcome your own rules if you want to become a trader.
Okay, so Boyd, how do you pronounce this name? You got to help me here.
Oh, Bodhidharmasan, but it's more or less saying Bodhi is all right.
All right, yeah, because that didn't make my life any easier. Bodhidharmasan. This is
Yeah, that's
a
right.
trading discussion event. It's the 10th one I've held, the third one public. And the topic for today, just so you're aware that, with people not having risk management, this is assuming that everybody does have the right money management principles and rules, but they have entered into the revenge trading trap. So this is when they know how to trade. They've got their system. They've got their risk management rules. But then one day, the market takes it out on them and they feel like they need to make it back up. And so they avoid their risk management, which leads to future problems and sets a precedent. Because if you think about it, every decision that you make in your trading determines the integrity of you as a trader. Go against your strategy, go against your system, and you are going against your entire integrity as a trader. You know? But
Indeed, yeah.
yes. Okay. Well, just so you know, Bodhidharmasan, at the top you can see this is a multi-trader event. And if you'd like, you can join the multi-trader Facebook group, because you already have a username and you're already on AltSpace. And then I will add you onto the Facebook Messenger group to as reminders for when these events take place, and also for extra videos, because the thing is, these are recorded events. So just go now to, or just send me a message with what your Facebook name is, and I will add you to the Facebook Messenger group. And anybody here who's not on the Facebook Messenger group, Imago, I don't think I have you yet, so I'm so happy you popped in. But just send me your name if you're not on the group yet, and then I'll add you on, or you can search on Facebook Mati Trader. Okay. So let's move to part 4. So part 4 is emotional trading, where you trade on impulse and no rationality. Raise your hand if you want to say something about this, and tell us your story when the last time you traded on emotional basis, so that we can possibly help you stop that in the near future. Just raise your hands.
Yeah, I'm only a young trader, so I haven't gone through that yet. I've had emotional days, but none where I've lost money in that, because I try and stay out of the market when I'm emotional.
That's good. No, that's good. And you know, there's times where you can feel emotional on the strangest days. So you run out of petrol, and then you lose money on the markets, and then you blame the markets. Or it's your birthday, and you believe that the market owes you a present, and so you take a trade, and then it goes against you, and then on your birthday you say, no way am I losing money, I am going to keep trading. These are all emotional basis that happens, as humans, that where we trade on zero rationality, but rather within our present-oriented way. Dr. Sam, I know you want to go, so you're going to have to go soon, but I do want to hear your thoughts just before you go. I'm going to put the megaphone on you.
So Timon, yeah, I was, it was 2001, it was in the month of June, and I had heavily invested in a stock called WorldCom. And the stock was actually rallying. I had doubled my portfolio within a week, and I was quite confident. I dropped my guard, and the share started to come down a little bit, just a little bit. And I thought to myself, this is just a temporary glitch. WorldCom can never collapse. And I started buying as the share was coming down, trying to average out, and within maybe 72 hours, I had lost almost my entire savings on this. And this taught me a really grave lesson that took me, I think, about a decade to come back to where I was. So it was a terrible experience for me. And if anybody wants to, you can go and Google WorldCom. It was one of the biggest frauds on the American Stock Exchange that ever took place.
It was in the 90s, is that correct?
If I remember correctly, I collapsed in June 2001, if I remember correctly. But the company had started in the late 1990s.
So that was during the dot-com bubble.
Yes, it was through the dot-com bubble, correct.
And did WorldCom cook their books, or was it fear that sold the prices?
No, they cooked their books.
As regards to emotional trading, one of the things I have to remember is, having worked in a factory where you get paid for your time, if you're there all day, you expect a day's pay. It's not determined by what you did. Whereas when you're trading, you can sometimes sit in front of the screen all day and say, well, I've put the hours in, where's my money? So you'll take a trade, even though there aren't any trades to be had, just as because you want that reward because you put the time in. You feel you deserve something. And trading doesn't work like that.
Do you still go through emotional and revenge trading at times, Martin, even after 15 years?
Not as much as I used to. I'm sometimes tempted a bit, but I've got something now to help. And that is, if I look at the charts at the start of the day, there's no good trades, then I can say, because I'm starting to get into programming now for expert advisors and making scripts and indicators, I can now say, okay, no good trades, I'll get on with my programming. Then at the end of the day, I can still feel I did something useful because I made progress with that.
And
whereas previously,
and you'll notice you distracted yourself, which also stops the revenge trading. And at the end of this, at the end of these parts, I then want to go through solutions to avoid revenge trading, because the last time I took a revenge trade was probably in, let me think about this, 2011. That was the last time I took an emotional trade through revenge trading. And it was during the time when I was still trying to find my feet as to who I was as a trader. And the only thing that stopped me from revenge trading was when I realized that my employer was my system and I was the employee. And the employer will pay you if you meet your KPIs. Does that make sense? I do need to see emojis just so I can see what you thought about it, if you can relate.
what's KPI?
KPI is the minimum criteria, key performance indicator. So when you get a job, you've got to fulfill your KPIs. In the UK, you probably call it something different. In South Africa, we call it KPIs. So you have a criteria. All right, Dr. Sam, let's try your microphone again.
So, Timon, I have a word that I have always used in reverse of revenge trading, and I've called it bravado trading.
It's a nice word.
And the reason I call it bravado trading is because as a young man, when I first started receiving a salary, I was induced into playing the stock exchange. And of course, there was no internet in those days. I'm talking about 40 years ago. There was no internet. You totally relied on the newspaper and hearsay. And I got in a bull market. So every time I bought, I made money. And I really thought that I was a raving genius. And it had nothing to do with my capabilities. It just so happened that I'd got in on a wave, and the wave was going upwards. So I had developed this bravado that I could never lose money. And that was actually the first time, before the WorldCom experience, that was the first time that I lost money. Obviously, I didn't lose my entire savings, but I had lost money, and that taught me a small lesson, is that you can never be too brave, and brave is not the word, it's bravado, where there's a bit of show off. So that's the word I've coined
I do like
ever since then.
I do like that word very much. I just don't know if people have that vocabulary. What would be the difference between bravado trading and ego trading?
I think bravado is a totally different word. I mean, bravado is a show off. Bravado is a boldness.
Okay.
Bravado is to impress, but at the same time to intimidate. So I think they're two different things.
Thank you, Dr. Sam. I will be using that word for discussion. Very nice. So before we get to the solutions, what else does someone have to say about revenge trading? Just raise your hand. I'll give you 10 seconds.
I was just going to ask if your other question, you asked what to call it when you're adding to a winning trade.
Yes.
I just wondered if you were looking for the answer over leveraging.
Over leveraging, not always, because sometimes you'll just take a trade following your risk management rules, but deciding to swing the trade over. Over leveraging is when you're risking a lot more. But then, it could be, but it's debatable, Martin. I mean, you are putting in a lot more than what you should have. But the thing is, if your system requires you to average up, when, for example, when the risk to reward on my system goes to 1-to-1, then I'm happy to average up and then move my stop loss, and it's very strategic. And I am over leveraging, but it's part of the system. Bravado trading, as Dr. Sam coins, is where you are not considering anything rational other than you want to make more money, you know. So yeah, so how do we stop the revenge trading? That's what I want to know, Martin.
Well, like I said, have a distraction.
Okay. Let me just mute you.
For me, it's
All right, sorry, no, go for it. I like that.
I like to be able to get to the end of the day and feel I've done something useful. Even if I didn't trade, I've made progress with my programming instead. Done something.
So in South Africa, I say go and grab a cold one. And this is my favorite, where when you are feeling like you want a revenge trade and you've taken a loss, you need to step away from your computer and go and grab a drink, go and watch Netflix, go to your kids, go make ice cream, do whatever you need to do to stop yourself from going against your system. Like literally just take your hands and push the table and go away, because your irrationality will kick in. So distract yourself and understand that the markets will be here tomorrow and the markets will be here in the next century. So whatever you need to feel and do right now can wait, and take deep breaths. That's another thing, you know, with distractions, is if you don't want to leave your computer because you're a high frequency trader or you've got to trade more, rather take 10 deep breaths. This is the same in life. When you're angry and you just want to splurt out what you're feeling rather than what you're thinking, just take 10 deep breaths in and out and calm down, and then say, okay, is what I want to do rational, and is it good for the future? So the first solution was go and grab a cold one. Let's see. Dr. Sam, let's try your microphone again. I don't know what the issue is today. Yes?
Timon, just my experience with fellow investors is that the emotion is driven by two factors. One is greed and the other is fear. And most times greed overshadows fear. So somehow one has to instill in a person an element of fear that they shouldn't be trading in areas which are uncertain. And for many of us, it's difficult. Even myself now, who's got a strict strategy, I'm risk averse, that element of greed often creeps in. And I remind myself of the past experiences I've had. And that fear keeps me from treading into revenge trading.
What you mentioned was your experiences were very few, but they were very drastic. Where, like, if you told me that you lost a bunch of your savings through WorldCom, and I tell you that I have lost not a lot of money, but I have lost over 2,000 to 4,000 times by revenge trading. There's two ways that you learn the hard way. One, you lose a lot of money. Two, you lose a lot of trades that you weren't supposed to lose. So if I had to guess, if you had more situations where you lost a lot of money, or not even lost a lot of money, where you lost money, because it's more psychological than anything, and they were too numerous to count, then you would have learned subconsciously through your past experiences and through your past trades. But I find that when there are few occasions that people lose a lot of money, seldom do they actually learn from their mistakes. And the reason is because they haven't gone through the hitting down over and over again, where you realize that your system outweighs your rationale.
Yeah, you made total sense. Is that the system will always override your emotions. I mean, that's exactly what you said, and that's correct. This concept that you can beat the system, and the system, as we say it, I mean, is a global term for the way the markets behave, and the markets will behave immaterial of what you think, how you behave, how much you buy, how much you lose. The markets will behave in a specific way. And if you think you're going to predict those markets, you're in for a surprise. So it's critical to have good risk management and to get out when you have to get out, and not allow your emotions in any way to influence your trading decisions. And I've learned that over the last maybe decade or 15, 20 years now.
I was just going to say something else that I did that was bad. Years ago, I set some rules, didn't stick to my rules, lost money. Then I did it again, didn't stick to my rules, lost money. It was only a tiny amount of money, but I was so angry at myself for not following my rules, punched myself in the head, going, "Don't do that, you know not to do that." Kept punching myself in the head. Next day, I was seeing double. One of my eyes went inwards towards the other. And that went on for months.
You've got
and
it. You've got
doctor
it.
said
You've got to go through it.
Yeah, the doctor said that you've probably damaged a nerve, and eventually my eyes went almost back to normal.
Yeah, maybe not hitting yourself. I mean, I've had when I used to trade in a office, and back when I needed a job, I had high frequency traders in the same room as me, and they would get so angry. And I want to see your emojis because I'm happy to tell you the story. But I walked into the office and they got so angry that they lost their trades that they took their keyboard and they smashed it on the table. It was like bah bah bah. Oh geez, I just scared my cat. And then what happened was I come in, I say, "Congratulations, you've destroyed the keyboard. I know it's cheap, but now you can't trade for the rest of the day." He says, "Timon, I've already thought about this. I have a spare keyboard." He took a keyboard right from under his desk. He put it on and he started again. And another guy, and I was like, what are you going to do? Are you going to also throw a keyboard at the table when you're angry? He says, no, I've got glasses. They're much cheaper. And he takes a glass and he just throws it at a wall. And so everybody takes some form of punishment within themselves when they lose the trade. Some people break their keyboard. Some people throw glasses. For me, I was just disappointed. Like, I don't know. I'm probably the most risk-averse trader in the world. Probably John Neville and Dr. Sam knows this. I'm probably the most risk-averse person in the world. But if I take a trade, whether it goes for or against me, that's not supposed to be according to my strategy, I'll have a sleepless night feeling how disappointed I was in myself. And that disappointment stops you from that. Neville, I would love to hear your thoughts. I see your microphone's working now on revenge trading. Neville's one of our premium multi-traders who's been with me for years. So hello, welcome.
Hello, can you hear me now?
Absolutely.
Okay, very good. I've actually been following this almost right from the beginning, after having to try to sort the mic out, which took a while. Revenge trading is really, really more common than I think most people realize. I did it 2 days ago, I think, and it was on one of the historic Forex markets. And I was convinced, based on what's happening in the world, so I was following the fundamentals more than the actual charts. And I was absolutely convinced, okay, you knocked me out, but you only just knocked me out. So I took it again, and I thought, no, that's really not very good. So revenge trading can happen. I don't care how long or short you've been doing it. Sometimes you just get your mind into a state where you say, that can't be right. You can't do this to me. And instead of sitting on your hands or walking away, or following your plan, you just say, I'm going to prove to you I can do this, just to burn your fingers again. And that's where I'll leave that.
And I think it's all down to school fees. When you're learning to trade, you can manage how much the learning process is going to cost you. And how is that? Well, either you can learn to trade with a demo account where you lose nothing but your emotional integrity and paper money, or you can say, you know what, because I'm learning to trade, just because I have money to trade does not qualify me as a good trader. Very important. So if you have, and I get this so many times in emails saying, Timon, I have $50,000 to trade, or I have $150,000 to trade, what do you suggest? First of all, I can't tell people what to do with their money because I didn't go that route to become a financial advisor. I have to say that. But what I do say is that risk money you can afford to lose, right? But also, if you can lose that $150,000 psychologically, why start with that amount to begin with if you don't know how your trading is going to go? Why don't you just start with $10,000 and then work your way up? See how it is. See how the real factors take into place. See how the Forex market works in real life. Because you might be able to psychologically lose $150,000. That's fine. But can you lose that 5 times in a row? Psychologically, it'll destroy you. So rather take $10,000, and if you lose that, come to me, talk to me, ask other traders, learn to trade, and then put another $10,000. You have 10 lots of up to $100,000 that you can learn to trade, and you can base your own school fees exactly on that. All right. Does anyone have one more or two more solutions with revenge trading?
Yeah, I don't look at it as winning or losing or anything anymore. You just come out of the market and go back in again. That's why I don't feel bad. If I feel it's going the wrong way, I just think, well, I don't normally lose that amount, and I cut it and turn the algo off for a couple of days. But for that chart, I don't chase anymore. Oh, you know what you're saying? Everyone used to. Of course I did.
let me try and change your thoughts on that. And let's say if you lost a trade according to your winning strategy, did you not win for that day?
So, sorry, if my strategy's been back tested and I lose X amount and it's within that criteria, then probably yeah, I won on that algorithm.
Absolutely.
That is matching up.
Celebrate.
So
if you follow your strategy,
yeah, you celebrate.
Celebrate. You're a winner. It doesn't matter.
Yeah, sure.
The losses come with the territory. I've said that a million times.
Yeah, that's it. You just out the market. That's it.
And
then back in again the next day.
And when I have traders come to me and say, Timon, I didn't trade the strategy, but I was lucky because on non-farm payrolls, I jumped in when the results were better than expected, and I made $10,000. I might say, nice, because elocution lessons I was taught to say nice. But in my head, I'm thinking, this guy's going to lose all his money.
Yeah.
You know what I mean? Because you're once again looking at the dollar amount rather than the percentage of your portfolio, and you're not considering the longevity of your trading career.
Yeah, I think if you hit percentages and there's going to be an up and down in that gradient going towards that percentage, then you'll always be happy, won't you?
Absolutely.
And, that's how I look at it. Yeah.
And I think it's convincing, to have these events where we're now starting to relate more to within our situation, because trading is a very lonely job. All right. Unless you've like you follow a guy like me who likes to throw out trading memes and trading jokes and trading lessons and videos and services and stuff, then it's quite fun because we do this together, which is the reason why I did this. But in general, if you don't have anybody to talk to or follow, this is a very lonely job. And to be a trader and a consistent trader, you've got to love what you're doing, or else it could turn into the rat race. It could turn into a job that you don't like anymore. So my third solution for trading, and might I just say, Flapperchip, your sound and headset has been the best of the day. I cannot hear anything, and it's great. And actually, for those who are on the Multi-Trader Facebook Messenger group, I'm going to send you a link as to how to improve your headset so that it's perfect for alt space. I'll send you that link afterwards. It's very important that we get the sound right so that we can communicate more. But the third solution is to possibly follow a consistent and successful trader to a T, as well as trade your own account and learn how to trade, because the learning process does take time. It took me years. But then, before you know it, it just feels like it was yesterday that it took me 5 years. And if you don't want to struggle learning to trade, or struggle taking a trade, or struggle developing that trustworthy trading strategy, and you don't have the experience, then with pleasure, find a consistent trader who makes it in the world. Follow their signals, maybe risk less because no one cares about your money more than you. And then that will stop revenge trading in a way, because the consistent trader will communicate with you and to say, we lost that one, but we're on to the next one, rather than to have, your conscience saying, get back in the market, get back in. When you get into the market based on another trader's perspective and trading strategy, there is no reason for you to revenge trade on another person's strategy. I don't know if that makes sense, but what are your thoughts about that? Because I know most of you over here follow my premium multi-trader service, and I started sending out blind analysis, which is so much fun, where I literally look at the markets, I go through the markets according to the strategy, and I talk to you to show what my thoughts are with the trades we're in, and with how the trades played out, and also what trades are lining up. And when you get into the mind of the the trader that you are watching carefully, then you start questioning your own trading style and strategies. And, you know, sometimes it may feel like you're winning compared to that trader, but at least you have that reference to jump on board. And unfortunately, no one, no one really sees like when they join a trader service, they see it as, I'm going to make a lot of money with this guy. But the way to start it off is this is your opportunity to learn how the style works, to see how your personality works with the trading strategy, and then to compare and to build your own trading strategy on that. So I don't know if anyone has anything to say based on that. So the third solution was to follow a consistent and successful trading strategy, which I never had when I was younger. Flipper chip. Yes and no. Where basically when you're following a successful trader, the revenge trading feel, because it's not your trading strategy and because you have a little bit more trust within a proven strategy, could stop you or prevent you from over revenge trading.